Welcome to the Deep Dive. Today we're going to be looking closely at Organogenesis Holdings Inc. You know it as ORGO.
ORGO.
So if you're at all interested in regenerative medicine and, the future of wound care, this is going to be a deep dive you won't want to miss.
Yeah.
We're going to unpack their whole business model, analyze the leadership team, look at their financials, and of course, try to gauge the market's mood about their future.
Right.
By the end, you should have a pretty good picture of what makes this company tick.
Yeah, and
whether or not it deserves a spot on your watch list.
what's really interesting about Organogenesis is they're not just, making regular bandages and wound dressings.
Right.
They're really developing advanced therapies that use living cells and biomaterials to actually promote healing.
Yeah. Their flagship products, Apligraph and Pure Apply, are specifically designed to tackle those really tough-to-heal wounds that so many people struggle with. And, with chronic wounds becoming a bigger and bigger issue globally, because populations are aging and diabetes rates are rising, it seems like this company is really well-positioned.
Yeah. Absolutely. Chronic wounds are a huge burden on healthcare systems all over the world.
Yeah.
And that demand for effective treatments is only going to increase.
Right.
So that puts Organogenesis in a potentially very lucrative market.
Okay, so we've got a company addressing a very pressing need in a growing market.
Right.
But let's get down to the nitty-gritty, their core business. What
Okay.
exactly does Organogenesis do, and how do they make money?
So Organogenesis has two main segments. Their primary revenue driver is advanced wound care products, which made up something like 94% of their revenue in 2024. So think of these products as like the next generation of wound care, going way beyond simple bandages.
Not the kind of bandages I have in my, first aid kit at home.
Not quite.
Okay.
Their products are designed for complex wounds like diabetic foot ulcers, venous leg ulcers, even severe burns. These are wounds that don't heal easily with just conventional treatments.
I see.
Now, the other smaller segment of their business focuses on surgical and sports medicine products, which make up about 6% of their revenue.
Okay.
These products include implantable tissues and matrices used in various surgical procedures.
So they've got that primary focus on wound care.
Right.
But they're also dipping their toes into the surgical world. Seems like a smart move to kind of diversify.
Mm-hmm.
But with any healthcare company, I always wonder about the competition.
Yeah.
Who are they up against in this space?
Well, they face competition. Of course, some of it's pretty tough.
Yeah.
Big companies like Smith & Nephew and 3M, they're major players in the wound care market.
Okay.
But the good news for Organogenesis is there are pretty high barriers to entry in this field.
That makes sense.
Yeah.
I mean, things like clinical trials, regulatory approvals from the FDA, specialized manufacturing, building a distribution network.
Absolutely.
Those are some major hurdles for anybody trying to get in.
Yeah.
Developing these advanced wound care products is not easy.
Yeah.
And Organogenesis has invested a lot to get where they are.
Right.
That being said, they do operate in a complex regulatory environment.
Of course.
Medicare reimbursement policies, for instance, play a huge role in how these products are prescribed and used.
Ah, yes. The healthcare economics never too far away.
Right.
It's not enough to just have a great product. You got to make sure it's accessible and affordable.
Exactly.
How has Organogenesis navigated these challenges?
They've actually been quite proactive.
Okay.
In recent years, there have been some big Medicare coverage changes that really shook up the whole industry.
Right.
A lot of their competitors lost coverage for some of their products.
Wow.
Create a lot of uncertainty.
Yeah.
Organogenesis, though, they worked closely with policymakers
Okay.
to make sure their key products stayed on that reimbursement list.
I see.
This was a smart move and could give them a real edge in the market. So while other companies are scrambling to adapt, Organogenesis was prepared.
Exactly.
That says a lot about their management's foresight.
Yeah.
And, their ability to navigate these complicated waters.
Absolutely.
Speaking of management, who are the key players steering this ship and what's their track record like?
So the CEO is Gary Escalhini Sr. He's been there since 2014.
Okay.
He's got a really long history with the company, over 15 years, and has led them through quite a bit of growth, including strategic acquisitions.
That's a good sign. A CEO with that kind of tenure usually signals stability, deep knowledge of the industry.
Absolutely.
But beyond the CEO, what's the overall leadership style like at Organogenesis? What kind of culture are we looking at here?
One thing that really stands out is their focus on transparency and open communication.
Okay.
They're very upfront about the challenges they face, and they actively engage with stakeholders.
That's always a good sign. It suggests they're not trying to,
Yeah.
hide potential issues.
Yeah.
But has their leadership faced any significant controversies or scrutiny in the past?
There have been a few allegations raised by short sellers,
Okay.
but none of these allegations were ever actually legally proven.
That's an important point. So we're looking at a seasoned CEO, a leadership team that values transparency, and no outstanding legal or compliance issues. Seems like a pretty solid foundation from a management perspective.
I think so.
Now let's switch gears and talk about the company's financial health. Are they making money?
Okay.
What are their growth prospects like?
So to understand their financials, you need to understand their approach to investing.
Okay.
They've chosen to prioritize reinvesting in their core business and pursuing growth over paying dividends to shareholders.
So they're playing the long game.
Yeah.
Betting on future growth rather than immediate payouts makes sense for a company in a dynamic field like regenerative medicine.
Exactly.
But what exactly are they investing in? Where's all that money going?
Well, research and development is a big one that's critical in this industry. In 2022, they spent $33.8 million on R&D, which was about 8% of their revenue.
Wow.
They're also actively making strategic acquisitions to broaden their portfolio and bring in new technologies.
Acquisitions can be a bit of a risky game.
Yeah.
How successful have they been with integrating those companies and technologies into their existing operations?
Well, they seem to have a pretty good track record.
Okay.
For example, their acquisitions of Dermagraft and New Tech Medical brought in some really valuable technologies that have boosted their products and their revenue.
So they're investing in R&D, they're making acquisitions clearly focused on growth.
Mm-hmm.
But what about their balance sheet? How's their debt situation, and do they have enough cash on hand to fund these plans?
Well, they've actually been pretty careful with their finances.
Fine.
In 2024, they took some steps to really strengthen their position.
Okay.
They secured a $130 million private placement and then used that money to pay down debt and buy back stock.
That's a bold move. It suggests they're confident in their ability to generate cash flow in the future, and they're prioritizing that financial stability.
Right.
Were those moves successful?
They were.
What does their debt and cash position look like now?
Well, they ended 2024 with 0 term loan debt
Wow.
and $136 million in cash reserves.
It's a pretty impressive cushion.
Yeah, it is.
It gives them a lot of flexibility and resilience in a market that can be pretty volatile.
Absolutely.
But let's get to the bottom line. Are they profitable?
Okay.
What do their key financial metrics tell us?
Their profitability has been a little bit of a mixed bag in recent years.
Okay.
They did achieve a small net profit for 2024,
Okay.
but their core operations are actually more profitable than their GAAP results might suggest.
Okay, so there's more to the story than just the headline numbers.
Right.
What's driving this discrepancy between their GAAP and adjusted profits?
So their adjusted net income, which excludes certain non-recurring expenses, came in at about $20.5 million in 2024.
Oh.
This suggests that their underlying business is healthier than those GAAP numbers might initially indicate.
Interesting. So they are profitable, but perhaps not as profitable as some investors might like.
Right.
What about their margins? Are they generating enough profit on each dollar of sales?
Their gross margins, which measure the profitability of their core operations, have been pretty healthy.
Okay, good.
They were in the range of 70 to 75% in the fourth quarter of 2024.
That's great.
However, high SG&A and R&D costs have been impacting their overall operating margins.
So while they're making a decent profit on their products, their operating expenses are eating into their bottom line.
Mm-hmm.
Makes sense given all their investments in growth.
Exactly.
But what about their return on invested capital, or ROIC?
Yeah.
This metric tells us how efficiently they're using their capital to actually generate profits.
Their ROIC has been modest,
Okay.
but their focus on those higher margin products and operational efficiency suggests that there's potential for improvement in the future.
Sounds like we've got a company with a pretty solid financial foundation,
Yeah.
but still room for improvement when it comes to profitability.
Right.
Now let's switch gears again and talk about how the market is perceiving Organogenesis. Are investors excited about this company, or are they hesitant?
Good question.
Stay tuned, because in the next part of our deep dive, we'll explore market sentiment ownership structure and conduct a thorough risk assessment.
Sounds good.
So you're probably wondering how the market feels about Orgo. After all, a company can have a great story and solid fundamentals, but if investors aren't biting, it can be an uphill battle. What's the sentiment like surrounding Organogenesis?
Well, leading up to their most recent earnings report, market sentiment was a little bit mixed.
Okay.
There were some concerns about those Medicare reimbursement changes we talked about,
Right.
and the thin profit margins were making some investors hesitant.
Yeah, that's understandable. Uncertainty and fluctuating profits can make even the most seasoned investor a little jittery.
Yeah.
But then came that Q4 2024 earnings report. It seems like that really shook things up.
It did. They absolutely blew past analyst expectations with a strong earnings beat,
Wow.
and they offered some really optimistic guidance for 2025.
That's what I like to hear.
Okay.
So has this positive news shifted the market's perception of Orgo Day?
It seems like it has.
Okay.
The stock has seen a noticeable surge, up about 12 to 15% since the earnings report.
That's significant.
It's starting to gain some real traction as a potential turnaround story in the healthcare sector.
A comeback kid. Investors love a good underdog story.
Uh-huh.
But before we get too carried away, let's talk about the people holding the reins.
Okay.
Who are the major players in Orgo's ownership structure?
So Organogenesis has a fairly diverse ownership structure. Around 59% of the shares are publicly traded,
Okay.
which means you and I can buy a piece of the pie.
Right.
The remaining 41% is held by insiders and early investors.
That's a significant chunk.
It suggests that those who know the company best, the people who built it, are holding on tight.
That makes sense.
Yeah.
But does that make it difficult for everyday investors to have a say in the company's direction?
Not necessarily. While there is a significant insider presence, there's also a healthy amount of institutional investment.
Okay.
Soleus Capital, a healthcare-focused fund, holds almost 10% of the shares.
Wow.
And Morgan Stanley Investment Management also has a sizable stake.
So it's a blend of those who've been with the company since the early days and institutional investors with an eye for potential.
Right.
That seems like a pretty good balance.
Yeah.
But no investment is without its risks.
Of course not.
What are some of the potential downsides or challenges that Orgo faces?
Let's approach this systematically using a SWOT analysis framework. We'll look at Orgo's strengths, weaknesses, opportunities, and threats to get a well-rounded picture of their risk profile.
Okay, I like.
Starting with strengths, their established product portfolio is a major asset. Apligraf, Dermagraft, PureApply. These are recognizable names in the wound care world,
Yeah, for sure.
and they've given Organogenesis a strong market position.
Like you said earlier, they've built a solid foundation,
Mm-hmm.
and they managed to navigate those Medicare changes skillfully, which only strengthens their position. But what about some of their weaknesses?
Sure.
Every company have areas where they could improve.
Absolutely. One area that needs attention is their inconsistent profitability.
Okay.
Their net income has been up and down over the past few years, which can make investors a bit wary.
I can see why that would be a concern.
Yeah.
Unpredictable earnings can make it difficult to assess a company's true value. What else should investors be aware of?
Another point to consider is their heavy reliance on the wound care segment.
Okay.
Over 90% of their revenue comes from this one area,
Wow.
which makes them somewhat vulnerable. If something were to disrupt the wound care market,
Right.
it could have a big impact on their business.
That's a good point. Diversification is key, especially in a sector as dynamic as healthcare. What steps are they taking to address this?
Well, they are trying to diversify. Their surgical and sports medicine segment, while currently small, is an area they're looking to grow. And then there's Renew, that exciting therapy for knee osteoarthritis we touched upon earlier.
Ah, yes, Renew. It sounds like it has the potential to be a real game changer for them and for the osteoarthritis market as a whole.
Absolutely.
That's a market with millions of potential patients seeking relief from pain and limited mobility. It could be huge.
It could be.
But what about those threats you mentioned? What are some of the external factors that could negatively impact Orgo?
As with any company in the healthcare space, regulatory changes are a constant threat.
Of course.
Medicare, as we discussed earlier, can have a huge impact on their business.
So even though they navigated the recent changes, well, the regulatory landscape could shift again, creating new challenges.
Exactly.
What else is on their radar?
Competition, of course, is always a factor. New technologies are constantly being developed. Someone could come along with a product that's cheaper, more effective, or simply more appealing to healthcare providers and patients.
It's the nature of the beast, right? To stay ahead, companies need to be innovative and adaptable. What about internal challenges? Are there any execution risks that we should be aware of?
Certainly, getting Renew through the FDA approval process is a big hurdle. There's no guarantee it'll be approved.
Right.
And any delays or setbacks could really impact their growth plans.
So it's a high-stakes game with potentially big payoff, but also some significant risks. It sounds like they're walking a bit of a tightrope.
That's a fair assessment, but it's also what makes this company so fascinating. There's a lot of potential upside,
Yeah.
but investors need to be aware of those inherent risks.
Okay, so we've covered a lot of ground. We've looked at their business, their leadership, their financials, market sentiment, ownership structure,
Mm-hmm.
and even conducted a SWOT analysis to assess their risks. But the million-dollar question remains, what does the future hold for ORGO? In the final part of our deep dive, we'll delve into their recent earnings call, explore their 2025 guidance, and reveal a thought-provoking question for you to ponder. All right, so let's wrap up our deep dive into Organogenesis by taking a look at their recent performance and what they're saying about the future. Their Q4 2024 earnings call had some interesting insights. What were some of the key takeaways?
Well, they were very excited about their Q4 results, as you might expect. Not only did they beat earnings estimates, but they also highlighted that really robust revenue growth driven by both of their segments, advanced wound care and surgical and sports medicine.
That's great to hear. It seems like their strategy of focusing on their core business while also diversifying into those surgical products is really working out.
It is.
But, a strong performance in one quarter doesn't always guarantee future success.
Right.
What did they have to say about their outlook for 2025?
They actually gave some very upbeat guidance for 2025,
Oh.
exceeding a lot of analysts' predictions. They expect continued growth and, even more importantly, a significant improvement in their profitability.
Now, that's what investors want to hear. But didn't they mention some potential headwinds in the first half of 2025?
Yeah.
Something about those Medicare policy changes leading to a kind of transition period?
Yes, that's right. They think the first half of the year might be a little challenging as the market adjusts to those new Medicare coverage policies.
Okay.
But they believe it'll be followed by a really strong uptick in the second half of the year.
So a little bit of a bumpy road in the beginning, but smoother sailing ahead.
Exactly. They really see that stabilized Medicare landscape as a great opportunity to capture even more market share.
Interesting. And speaking of opportunities, remember that exciting pipeline product, Renew, for knee osteoarthritis?
Oh, yeah. Hard to forget something with that much potential, a transformational opportunity, as they called it.
What's the latest on that front?
They're still on track to submit Renew for FDA approval by the end of 2025. And if it's approved, it could be a huge growth driver for them, tapping into that massive market of people looking for relief from osteoarthritis knee pain.
Yeah, it seems like all the pieces are falling into place for them. A compelling story with a potential blockbuster product on the horizon. But before we get too caught up in the excitement, I have to ask, what about the elephant in the room? The question that often pops up when a company starts to show this much promise.
You're talking about the possibility of an acquisition.
Exactly.
Yeah.
Could a larger healthcare player come in and scoop up Organogenesis?
It's definitely a possibility. With all their expertise in regenerative medicine, their established product portfolio, and that promising Renew therapy in the pipeline, they would be a very attractive target for a company looking to get into this rapidly growing field.
Absolutely. It's certainly a question worth considering. So that wraps up our deep dive into Organogenesis Holdings Inc. We've explored their business, their leadership, their financials, the market's perception, and even the potential risks and opportunities they face.
It's been a fascinating journey.
It has. And to all of you listening, thank you so much for joining us on the deep dive. As always, we encourage you to do your own research before making any investment decisions. You'll find links to all the sources we use for this episode in the description.
And if you're looking for more in-depth analysis and data-driven insights to help you make those investment decisions, be sure to subscribe to the Stock Analytics AI YouTube channel. We use cutting-edge AI to analyze all those market trends and really help you make informed choices.
We're always exploring new and interesting companies, so make sure you subscribe to the deep dive so you don't miss our next episode. And if you have any suggestions for companies you'd like us to do a deep dive on, leave them in the comments.
Until next time, happy investing.